Hi there, my name's Stuart Elliott. I'm the CEO and the founder of Elliott Scott HR, and this is our Q3 business update. In September of this year, we received our Japan license. The office there will be run by Sakura Tomita. Sakura's details can be found on our website should you need them at all. We ran 4 events in Q3. We continued our successful partnership with Bloomberg, running events in both Hong Kong and Singapore. In Hong Kong, we focused very heavily on diversity and inclusion, and in Singapore, the event looked at HR innovation. In the UK, we ran our first UK event, Brexit, Where Are We Now?, focused on the potential impact of leaving the EU for HR departments. The final event of Q3 was our 5th anniversary party, which we held in Hong Kong. Thank you to everyone that attended such a wonderful evening, and thank you also so much to all of our candidates and clients that have supported us over the last 5 years. Brazil spent all of 2016 in technical recession. However, in Q3, we did see an improvement in the business landscape after the impeachment of its president, Dilma Rousseff. The market in Brazil remains tricky, but with an improving political situation being seen as a really positive sign, we should see an increase in business productivity into Q4 and further into 2017. With US payrolls expanding in Q3, we've seen a significant shift in the North American market. We would now regard this market as very much candidate-led. We've seen candidates with multiple offers and also candidates now expecting a good salary increase should they decide to move from their current position. The market outlook in the US remains positive, and we continue to see this as a growth market for us in both Q4 and also Q1 2017. The UK had a slow start to things in Q3 on the back of the referendum in June. What we have seen though since then is that there's been quite a positive message from our global clients. People continue to hire new positions and people continue to work as normal because they just don't know what's going to happen with Brexit. Until we know that, I don't think anybody will actually put a firm freeze on hiring. So the market and the outlook for the UK remains cautiously optimistic. We know that Brexit will impact at some point, but as yet, we've yet to see anything. Dubai is still a new market for us. In Q3, we would say that business there has been relatively subdued. However, clients and candidates have been really responsive to the work that we put in there. What we do see is that things will pick up for us in Q4 and early into 2017. One thing that is worth highlighting is that we've had a lot of responses from people who want some help in either Saudi Arabia or Qatar. The outlook there, I would still say, is positive for us, and we're really pleased to be there in the region. Q3 in Hong Kong was relatively flat by our usual standards, but being a key link between both the East and the West, you can attribute this to both slowdown in confidence in China and also some uncertainty in the West as well. Unemployment in Hong Kong sits currently at 3.4%. This is by no means a problem. However, until issues in China get resolved and until the West has possibly the US presidential elections and a clearer idea of Brexit, I think that growth in Hong Kong will remain subdued. Q3 was our first full quarter in Japan. It remains a difficult market, one that is candidate short and in desperate need of good HR practitioners with both English and Japanese language capabilities. It's a market that we're looking forward to growing in Q4. Unemployment remains low in Singapore at 2.1%, and this had a really positive impact on our business. However, it is worth stating that this number is up on 2015. While we don't think the economy in Singapore is going to be struggling anytime soon, it is something that we do want to be watching. So our outlook is cautiously optimistic with regards to Singapore. Thank you for watching. If there's anything you'd like to discuss or you'd like to attend any of our events, please do get in touch with us via our website. Thanks again.